It's midday right here in Lagos, Nigeria. Welcome to Lunchtime Politics. I'm Jeffrey Uzoma, reaching you live from our global headquarters. And let's get to look at the big stories, including the biggest political stories across the country and other stories in the polity. Well, it looks like the new IGP has a job on his hand. I'm talking about Tunji Disu, who now takes over from Kayode Egbetokun, who has resigned his position as the IGP. The president has actually accepted his resignation. We understand that later today at about 2 p.m. Nigerian time, Mr. Tunji Disu will be taking over in a short ceremony, a proper handover from Egbetokun to Disu as the IGP, the Inspector General of Police. That's according to ASP Aminu Koji, who is the first Public Relations Secretary at the headquarters of the Nigerian police in Abuja, the nation's capital. Now, a moment of celebration was quickly transformed into chaos shortly after the former presidential candidate of the Labour Party, Peter Obi, formally received the former governorship candidate of the Labour Party in Edo State, Mr. Olumide Akpata, and other figures in the African Democratic Congress. Party members allegedly came under attack by suspected thugs. The former campaign spokesman to Mr. Peter Obi, a national coordinator of the Obedient Movement, Yunus Etanko, claims that the armed men trailed the delegation from the ADC secretariat to the residence of Chief John Odigeyegu, where gunshots were fired at the gate and several vehicles vandalized. Mr. Obi condemned the incident, warning that such violence poses a great threat to Nigeria's democratic space.
You can see what happened in front of his house, where Goodluck came shooting. You can look at his gate and everything. I see the bullet at his gate. You could see it. You could see several cars were damaged and everything. That is where our democracy has reached. This is where our democracy has reached. As I said earlier, those who yesterday claimed to be democratic have now become the greatest destroyer of our democracy today. I know people are keeping quiet, but anarchy consumes everybody. It is time people speak up. It is time those in government act. They are not going to be there forever. They are allowing this to happen today. What they are allowing to happen in our country today will take its revenge on all of us and our children tomorrow.
Well, the government has also responded. It has condemned that attack, and investigations are ongoing. But earlier we spoke to the spokesperson to the governor, Mr. Bogi Okiomo, and this is what he had to say.
If they had followed due process, for example, informing the security agencies that they were going to be having that event, getting security personnel on ground for their events, then we probably wouldn't have experienced things like this. We also appeal, the governor is also very concerned about the utterances of people like that and, players in spaces like this, to be careful about the things that they utter. While in the heat of emotion and excitement, you can say certain things, it's important that you think of the overall effect it has on the state and it has on the populace. To say that there was an assassination attempt, I think that was a bit heavy. And leaders should be responsible for the things that they say. From what we have seen from the initial pictures that we've seen and videos, we saw a couple of vehicles, that had been destroyed and a few bullet cases on the floor. We don't know where they came from, but from what they said it was shot. I think that's far from an assassination attempt. While the governor has called on the security agencies to look into the situation, it's also very, very important that attention is paid to the internal crisis presently going on in the ADC.
Well, while that is still being investigated, the Monetary Policy Committee of the Central Bank of Nigeria has cut the monetary policy rate by 50 basis points. This comes 5 months after the interest rate was reduced by 50 basis points, making it 100. The regulator, however, retained the parameters, including the cash reserve ratio at 45% for commercial banks and 16% for merchant banks, while it increased the applied to non-treasury single account public sector deposit to 75% CRR for better management. Let's take a listen to the governor of the central bank, Alaje.
Decisions of the MPC. The committee decided as follows. 1, reduce the monetary policy rate by 50 basis points to 26.5%. 2, retain the standing facilities corridor around the MPR at plus 50 to minus 450 basis points. 3, retain the cash reserve requirement, CRR, for deposit money banks at 45%, merchant banks at 16%, and 75% for non-TSA public sector deposits. The committee's decision was premised on a balanced evaluation of risks to the outlook, which suggests that the ongoing disinflation trajectory would continue, largely supported by the lagged transmission of previous monetary tightening, sustained exchange rate stability, and enhanced food supply.
Let me bring you my guest, the chief economist at SPM Professional, Mr. Dr. Paul Alaje joins us now. Dr. Alaje, thank you so much for coming on the program.
Thank you so very much for having me.
All right, we're going to binge through this as quickly because I have a plethora of questions for you. But the CBN governor said balanced evaluation based on the risks to the outlook, given the tapering inflation, exchange rate stability, food supply, has given them a premise for a 50 basis point reduction. The cut the interest rate and asymmetric corridor around the MPR sitting around plus 50 minus 450, talking about looking in the direction of lending to companies and all of that. But we spoke to a professor of economics from the University of Uyo earlier today, Professor Emmanuel Onwodiokut, and this is what he had to say, and I would like your own evaluation based on his response to what the CBN governor said. Just a moment, Doctor.
Economic as fiscal dominance of the monetary policy. It might be interpreted that there is a pressure on the bank and the central bank to lower the interest rate so that the bank can borrow more, or so that the government can borrow more from at a lower cost. Because the government have come out with a policy that they want to increase domestic borrowing. And if the interest rate is lower, it makes the cost of borrowing lower for the government. And you know that government, when they borrow, they can crowd out the private sector because the stock is limited. If they take 50%, only 50% will be available, will be borrowed by the private, to be lent to the private sector by the bank. Therefore, that's what I talked about, the credibility problem of the central bank earlier. This could easily be interpreted to mean that they are easing the monetary policy easing is to accommodate the fiscal authority, to accommodate the government, so the government can have a field day borrowing at a lower cost. Fiscal and monetary authority. One cannot be pouring water while another one is trying to mop. It will be exercising futility. The fiscal authority should coordinate with the monetary authority to ensure that they are consistent. If the intention is to bring about reduction in inflation rate, the manipulated inflation rate, if we didn't talk that, I thought we would have talked about that, because this figure does not reflect our inflation rate in Nigeria. There is no country in the world where the rate of inflation would decline by over 10 percentage points in a month that we experience in Nigeria. And that was essentially because of the change in the methodology for computation. And we should not lose sight of that. And the danger is if you, by whatever reason, manipulate that, is going to lead to, again, to mislead the monetary authority to begin to think that it is truly disinflation, and they will begin to cut rate like this.
Dr. Alaje, you've seen the two posturing. I've talked about the risks to the outlook, exchange rate, and all of that. Ben is talking about this is cutting the cost so that government is complaining of positive of funds or whatever releases there are, and is doubting the MBS's number. So do the comparison for our audience to understand what exactly is playing out here.
Yeah, thank you so very much. Fantastic outfit yesterday. The Central Bank of Nigeria, through its Monetary Policy Committee, reduced the interest rate on 50 basis points, 25%, reduced to 26.5%. Recall that in the last sitting, the Monetary Policy Committee has reduced the rates by another 50 basis points, making it 100 basis points. And we have remained really high in a very long time. So here is the point. I see a lot of economists are wondering why the cost was slow. Some are saying why we didn't even cut at all. It's important for us to understand that the inflation that we have seen, which of course is one of the key factors for price stability in Nigeria, inflation according to the Bureau of Statistics is 15.1%. And many have asked, when they go to the market, they have not been able to see reduction in prices that agrees with the kind of inflation we had. I think the SG or Bureau of Statistics have already answered that question, because we have that sporadic reduction, which Prof asked in his interview with your correspondent earlier, was because of rebasing, not necessarily because of price reduction. And that is why I'm of the opinion that if the Central Bank of Nigeria had reduced the rate, for instance, by 500 basis points, you might have seen a return of inflation, you might have seen a return of crisis. I had warned earlier, late last year, that if rate must be reduced till the end of Q1, which is the end of March, it must be done gradually and slowly. Why? Because where we have seen stability largely is on the exchange rate, which has moderated to about 1,320 to 1,380. Price stability, even though the number says 15.10%, in the real sense, prices are still quite high. It might not be as high as they were in 2024, but the rate of growth of prices are still there. My advice is that if rate must moderate, they must modulate slowly. The Prof is not wrong when he said that perhaps the CBN had done this to accommodate for government to borrow at a relatively cheaper rate. That may not be wrong, but we should also know that if government borrow at higher rate, is a cost to us as a nation. But if government borrow at lower rate, it's also reduction in cost of borrowing to Nigeria. So the summary of all of this is that we need to look at the environment. We have to look at the risk factor. We have seen that stability, which is the key mandate of the Central Bank of Nigeria, and of course a bank that serves as a government bank at the same time. One is, how do we have stability? We have seen that in exchange rate. I'm not saying exchange rate is now better than what it was in 2023. No, I am saying that the environment is relatively predictable and the environment is relatively stable. That's one. Two, it's also important to pay attention to stripe stability. Stripe stability here, Bureau of Statistics is saying that it was 5.15% just before now, and reduced on about 5 basis points to about 15.1%. But in the real sense, inflation, if you are not using the new parameter to measure, is still high. And I think on that basis, the central bank is also working with a lot of caution. That is why we are not seeing a major reduction as many would have expected. Third, which is the most important, somebody in America, I don't want to mention him, but a leader in America may wake up one morning and increase interest rate in America by 1%. The truth is that it will crowd out the entire investment we claim we have. Watch, Nigeria now has over 50 billion in foreign reserve. That 50 billion in foreign reserve has given us over a year import bill. What that does is that we can project that Nigerian exchange rate will remain stable, not just to Q3. It has confidence are there that it may extend to Q4. But why central bank must remain very cautious, which I support, because I support a marginal reduction, is that we are in an election year. Recall that by March last year, I mentioned that central bank should be watchful of what will happen this year. It's a pre-election year. Politicians are notorious for spending foreign exchange, that's dollar, for politics. And they're also notorious for having high liquidity in circulation. I am particularly happy that Mr. Cardoso did not forget to mention that it's a pre-election year and therefore money supply is a factor. When you see high inflation, it is because money supply is high. It is because we have seen to a large extent people giving cash directly, perhaps for voters or to delegate or whatever it might be. This has always hurt our economy, and I'm afraid it has positives and negatives, but it's important for a central bank to be very watchful, just as we have seen in the case of Central Bank of Nigeria and their monetary policy rate that was carried out yesterday in Abuja.
Dr. Paul, I want to ask you a question around what is driving our data in terms of our numbers. Is it money illusion? So if we look at the reserve, for instance, we can explain what happened. Our holdings, our reserve holding, the rebalancing itself of that holding has shaped up some numbers for us. Now we have 15 billion, which is commendable. It can take us maybe in excess of a year. We also have the import substitution from the Dangote refinery, which has helped us to also stabilize a few things. We also have the DXY, which is the dollar taking a beating, so that has made the dollar to be weak. So all of these factors played into for us as far as this is concerned. So are we really dealing with growth and development here, or we're just dealing with rebalancing and some illusion?
Well, we cannot say that there is actual development at the moment. What you have is some rebalancing, because when your exchange rate devalues, it's going to have sporadic effect. What you see in Nigeria is that for now, those that are rich, we feel they are getting richer. The poor, and I mean extreme poor, we definitely become poorer. Not my figures. The World Bank says that 141 million people, human beings with names, are now living below the poverty line. That's not my figure. I only quoted the World Bank there. And so here is it. Before you can say that a country has development, it must have sustained growth. Nigeria must have double-digit sustained growth, that's the 10% and more, for a minimum period of 7 to 10 years before this growth can translate to development. However, I must give credit to a number of subnational, what I've been told myself. I've seen some of them constructing new roads so that can have impact on the value of real estate. That is why real estate seems to thrive, even though the growth is a bit marginal in the last report. But I must comment where efforts are made by those subnational, I mean states, in those regards. But there are some others that, of course, you worry the money is given to them, what they've done with all of those. So, but I must tell you that developments that, as much as we expect them, are not yet here. If we claim they are here, I can also say we need to look for the evidence. However, since we have decided as a nation to follow the pure market mechanism, we need to see it through. Where government must vote money to are the following: 1, rails. We must support the Nigerian Railway Corporation with the rolling out of new rail, maintaining the old wagons and old rails. 2 is we must ensure that there is road infrastructure. The third, which is the most important, is electricity must be available for all. And number 4 is that we must have internet access. Bandwidth must expand, as must penetrate to the list. You should not be discussing whether we should have electronic transfer of election result in a nation in 2026 is totally absurd, which is not a conversation we should be having. And the remaining 2 is quality of education, and most importantly, quality of health. These, among others, are things that will become the indicator for a nation to be developed. If you only see growth at 2%, 3%, 5%, 10%, and it's not translating to what I've mentioned to you, honestly, you can ask me again, I will tell you there is no development. Don't believe me, go to France, you will see it. Go to United Arab Emirates, you will see it. Go to a significant part of China, you will see it. Go to United States, you will see it. Go to part of Saudi Arabia, you will see it. Even some neighboring, some 1 or 2 African countries are also doing the things that have been mentioned. The most interesting one is Poland, that I've seen in Gliwice, a place that is one of the states that is not so pronounced, Katowice and Gliwice. I saw rail connected to marketplace. I saw rail connected to production center. Nigeria must do the same. We must do the same. I'm happy that, yes, power is now being deregulated. It's directly in the control of states now. We must do the same. for critical infrastructure. It's on this happen. All you have will just be numbers. All you have will just be illusion, and you'll be wondering what is happening. Recall that this is not the first administration that have tried to make all of this happen. But until we come to a point of deciding where is the future of our country, what are the major missions of a nation, what do we want to achieve in the next 5 to 10 years, and what must we sacrifice as a people to get there, we might start wondering what is happening.
All right, Dr. Alaje, I like your pragmatic approach. So let's stay a bit slightly technical for a moment and see how we can help this to trickle down. So on one hand, the government has said last year, the president himself said non-oil sector did quite well in terms of accruing our revenue, but you know, there were all kinds of argument around that. Where I'm going to with all of this is that if the argument to the effect that the rate is being cut to accommodate cheaper borrowing from government because the ways and means has been thrown out of the window, we also have the problem of crowding out effect. So how do we balance the dilemma of now banks being faced with borrowing to both government and the private sector? I don't know what percentage will work, so they can trickle down to all of us in a way that we can be able to bear, especially in a pre-election year, and actually help the economy to grow so that life is a bit more affordable to the people, because these things have impact.
The truth is that it's the toughest decision for any central bank to make as a government bank and a bank that also regulates other banks. On one hand, we have a responsibility to ensure that the private sector is not crowded out. What that means is that we have a responsibility to ensure that those investors in a country have access to cheap funds. Please check all the countries that Nigeria wants to be like. Interest rate on borrowing is not more than single digits. You have 3%, you have 4%. You see Chinese come to Nigeria with the loans they borrowed at about 4 to 5% to compete with manufacturers in Nigeria who are exposed to 30 to 40% interest rate. How can they be the same? Meanwhile, they have much cheaper money to trade in our country. But on the other side, if interest rates goes lower, how will foreign investors be attracted to borrow government money? Recall that if we don't have enough in our reserve, it will now affect both the local investor and government together. Why? Because exchange rate, of course, will be in disarray. You are going to see Naira go to about 3,000 to 4,000 Naira. That is not what we want to see. Therefore, the central bank will select its battle. The battle is to save the soul of Naira on one hand and also to stabilize prices. The fiscal authority and the entire remainder of government must not find a way to ensure that infrastructure is provided, which will make Nigerians and Nigerian people and those that are investing in Nigeria to have relatively competitive business environment, while central bank continues to gradually reduce interest rates so that those that have been crowded out, because I must tell you that when interest rate is really high, you are going to see that bank, instead of giving money to local businessmen and those that want to borrow money from them, they are going to give it to government, because for doing nothing, risk is almost zero. So why do I want to risk my business with quote and unquote near done anti-parts nursery and primary school to pay me at 40% when I can just give it to a state government that I know that when it's collecting its allocation, I can quickly collect the money back at the prevailing interest rate. So that's the challenge right there. The point here is that central bank should keep moderating it gradually, without also triggering what can affect our reserve. Recall that part of the money we have in reserve is not just the import substitution, it's not just remittances from abroad, it's not just rebalancing, it also, anytime Nigeria says it wants to borrow money from abroad, and the money is in hard currency, it goes to our reserve, which shoots up our reserve, and central bank releases Naira equivalent. It's also important for us to know. So it does happen, and those have invested in a stock market, those that have lent us money, they withdraw their money back. The question is, what will happen to reserve? And the reserve has direct correlation to whatever your exchange rate is. So it's important we balance this and we tread cautiously. Yes, I know economists might not be completely happy with some of this, but please know that economics have different fields. We have development, we have monetary, we have fiscal, economists. It's in balancing this and understand the monetary implication that being proper picture of the decision that was taken yesterday by the Monetary Authority.
Dr. Alaje, I see a situation in this campaign where one of the big things that the APC will have to deal with is policy pronouncement, money illusion, and real development. How to bring all these confluences to convince Nigerians that they've done a great job or not a great job is going to be the core. And people like you will be called upon to separate the wheat from the chaff. Thank you. Dr. Paul Alaje, SPM Professional Chief Economist. Thank you. Let me allow you to go for your meeting.
Thank you so much for having me.
Absolutely. Let's tell you that the All Progressives Congress in Obiakpor local government area of Rivers State is confident that it will take part in the party's national convention scheduled to hold later this year. This was made known by the APC Obiakpor chairman Lester Ejeko, who was speaking at the party's ad hoc delegates election in the state. And that's it on the program. Thank you so much for your time and, of course, your usual company. I'm Jeffrey Uzoma. You've been served on Lunchtime Politics. Bye-bye.